Let's do a little something on U.S. Steel, shall we?
Because
it's been a rough. It's been a rough week for shares of U.S. Steel. Of course, this was a company that I followed from some time from an M&A perspective, as our viewers may remember, as there were any number of bidders for the company, culminating in what was a $55 all-cash deal with Japan's Nippon Steel, and that was a number that was even far above the hopes of many shareholders. But it has not been a good week, and that was led off by a number of stories that indicated that the administration would essentially come out against the deal, if you want to call it that, and President Biden did more or less that, with comments about saying that he wants U.S. Steel to remain in domestic hands. What is that going to mean for the future of the deal, of course, has been a key question for many, and that continues to be a question. You still have the contract with Nippon Steel. How you would block the deal? Well, perhaps on CFIUS grounds, even though many have pointed out it's not clear that it really represents a national security risk in any real way. And what really did play an important role here, of course, was the unions. And the union leader of the United Steelworkers, David McCall, who has some sway, as you might expect, with this administration, particularly with Joe Biden, a man from Pennsylvania who's already walked a picket line over this last number of months when he did so with the UAW when they were on strike. And he got a good audience, right? So what now continues to be sort of the question. There's a shareholder vote in April. U.S. Steel shareholders expected to approve the deal. It's a $560 million break fee. Do you try to get CFIUS? Do you see what happens? Do you wait and see whether there's a change in administration come later this year or into next year? Those are any number of questions. And then there's the role that Cleveland-Cliffs has played here, and its outspoken CEO, Lourenco Goncalves. I had a chance to speak to him, as many people seem to be lately, this morning. He did go on the record with me. And listen, he points strictly to the deal that he signed with the unions and the fact that the importance of the unions was undersold. He, as he often does, was happy to name names, saying that the two bankers who sort of led the process for U.S. Steel were really at fault here as well. Talking about Grabos and Hofrecht, of course, Dan Grabos at Barclays and Brian Hofrecht at Goldman Sachs, saying they just didn't get it. You know, they believe the workers need to eat, and so you're going to figure out a deal with Nippon. Well, that has not been the case. Now, for its part, Nippon says that it is open to and wants to negotiate what would be a very attractive deal for the unions. Lourenco said to me, no, you know, they're never going to get that done. Hell will freeze over before, in fact, anything like that happens, given all the different asks that will come from the unions. And so the question then, all right, does Cleveland-Cliffs come back in some fashion and bid? Do they simply wait for the deal to fall apart under its own weight and then try to come back at a far lower price than the 54 cash in stock that they previously offered? We'll see. He did tell me, and I thought this was interesting, guys, that they had tried in previous weeks through Citi, which is Nippon Steel's advisor, to get Nippon Steel to talk to Cleveland-Cliffs, because Nippon Steel began this with wanting Big River. That is the plant in Arkansas that's the key. They were willing to pay as much as $9.3 billion just for that. And so Goncalves was like, listen, we'll buy a lot of the other assets. Let's have a conversation about that once you close the deal. No such conversation took place, and hence Dave McCall got involved, President Biden got involved, and here we are, wondering what really is going to happen here. By the way, the Japanese Prime Minister due in the U.S. in early April. Could be a somewhat difficult conversation between Biden and the Japanese Prime Minister.
There's just a slight bit of irony in the sense that there's a subjection to a Japanese owner. Maybe the union wouldn't be happy with it when you consider that Japanese companies just agreed to the biggest wage increases for Japanese workers, above 5%, biggest one in 33 years. So it's sort of this moment when there's an acknowledgement that workers kind of can demand and deserve a higher share.
Yeah.
And it's not automatic that it's going to be hostile to, giving the workers their share.
Yeah, I mean, so the underlying assumption that perhaps was wrong was that the union didn't really have much of a say here. Clearly that is different because they had a very important call to make, and they made it.
Also unlikely for that Cleveland-Cliffs would team up with the Steelworkers Union to lobby against this deal, which is what happened.
Absolutely.
In this case.
They are obviously have been a union shop and have a good relationship, does he, with his unions as well. So, you could end up, though, where U.S. Steel just remains a public company And is that good for the unions or not? Unclear.